Last month, the stock market crashed faster than ever in history. We've seen the Fed and Congress take unprecedented action in an attempt to present an all-out economic freefall. So will we see yet another crash to a new low in April? We will share our thoughts coming up.
This is Dumb Money Live with Chris Camillo, Dave Hansen, and Jordan McLean. Streaming live on YouTube. We are Dumb Money.
Hey there, Dave here along with Chris and Jordan. Welcome to Dumb Money. Has it sunk in yet that we're living through a major historic event right now? This morning, word that more than 6.6 million more Americans now jobless in a week. That added to the 3.3 million last week. For some perspective, the biggest number we've seen before that was only 697,000 people, and that was 1982. So as far as the economy, we're all a part of this experiment of stimulus and monetary policy unlike anything that has ever been seen before. Some people calling right now the opportunity of a lifetime to buy stocks at majorly discounted prices. Others are saying we're headed for a recession and a depression that will be worse than the Great Depression. I still fall somewhere in the middle. What about you guys?
Yeah, I think I am like just more confused today than I was yesterday, which is more confused than I was the day before. And you saw that tweet I put out, what was it, on Friday, that said, if I had a lot of people tweeting me and emailing me what's going to happen next, and I just don't have a clue. I how much conviction I had back in January and February that we were headed towards this black swan event and a market crash, and then everybody thought I was nuts. I was like, no, I don't see how we get out of this. And now, everyone keeps talking about these two camps, right? The camp that thinks, the worst is kind of, we can see the worst and we're going to get through this and it's going to be a V-shaped recovery and we have $6 trillion of stimulus. So how can we go wrong? It's just a matter of when, not if, right? And so you should be buying stocks here, which kind of makes sense to some extent. And then you have the camp of, and I have to give Jim Cramer some credit. Have I ever given Jim Cramer credit ever?
No, but I did see you tweet at him this morning. So,
I don't even remember what I tweeted at him, but I got to give him credit in his talk this morning. He mentioned that the unwinding of the implications, right, of one business shutting down and what that does to the landlord and what that ultimately does to the bank, right? How that connects to the government, how that ultimately connects to other consumers and other businesses is actually more complex than the unwinding of mortgage-backed security packages back in 2008, 2009, right? So, and I think that was an amazing analogy because that's exactly how I feel right now. I spent a few hours the other day just trying to unwind it for myself in a very simple way. And I couldn't find the end to it. I couldn't, you know what I'm saying? Like I was trying to figure out unemployment. I thought unemployment would be up 6 to 7 million today. I totally nailed that because listen, you make more money on unemployment right now. Most people make more money on unemployment than they do for their job. Most service workers, that is, right? We've talked about this.
Yeah.
So why would you not file for unemployment? I think unemployment is going to be exponentially bigger than it was even reported today because I'm getting reports out of New York, people that I know that are trying to file for unemployment, friends of mine in New York, just got off the phone with one of them who told me they have been trying to file since early this morning and have not been able to get through. The website is down, the phone lines are down. They actually cannot process applications today. What does that tell you? That tells you that New York was at 300,000 unemployment this week? No way. They're probably at like 1 million to 1.5 million just themselves.
Well, and we saw the same thing. Like last week, the number was 3.3, but then they had to upwardly revise that as more numbers trickled in, and the lines are bogged down at every unemployment office around the country. So, I mean, if you're trying to apply, you're trying to get your money, trying to take advantage of this benefit that's available, the chances of you actually getting in this first week or the second week it's slim because, I looked on the Texas unemployment website just to see, and it is it's a mess trying to even figure out which form you're supposed to fill out and everything. I can't imagine that everyone who qualifies has gotten through that process yet. So I think that, we saw it 3-3 last week, 6-6 this week. What is it going to be next week? 9-9?
So, Dave, I'm having conversations this week with a lot of former employees that, no longer work for me. They work for other companies that just happen to be unemployed, just pinging them to make sure that they're aware of this $600 weekly guaranteed federal unemployment on top of the state unemployment. Yep. None of them had any idea that was a thing. When I told them about that, they were immediately like, I'm going to go file. And they were trying to figure out how to file for it. They couldn't even, and I couldn't even figure it out. It was very confusing on the site.
Exactly. And even I was, trying to figure it out on the website and reading through everything. And they have special, a section to read. And then this page is going to be updated and this page hasn't yet been updated. It is a mess. And these numbers are going to get way bigger.
I think they're going to get way bigger. And listen, so we talk about drivers of the market right now. Let's just talk about what the drivers are. Because I think unless you understand clearly what's going to drive the market, you can't really run, you can't really run modeling or scenarios for what could happen. Right now, one of the big things that is going to drive the market is unemployment. That unemployment number is big. Now, it was expected this week to be somewhere between, north of 3.5 million. I think most people expected to be higher than that, though. So it wasn't a huge shock when it came in at 6.1. Another thing that is driving the market is oil, right? So this energy market has been insane. Now, have you been watching this morning? Trump came out and basically said that Saudi Arabia spoke to Russia, and that it looks like they're going to reduce production by 10 million barrels, right? Maybe 15. Very specific. That's very specific, right? And so then Russia came out and about 30 minutes later and said, we have not talked to them. Trump quoted that Saudi Arabia told him that they had a conversation about this. Russia says no conversations. And no one knows what to believe. And I think right now oil is still up. People are assuming that, they just don't want to talk about it, but a deal's on the table.
It's up big today, but in history, we've never seen an entire quarter as bad as this last quarter. It was down, I think, 67%, and we've never seen that before. So it's maybe up 20%. This 25%. How are things moving so much? Like the Dow moving 1,000 points every day is not normal, but it is the new normal. Everything is the new normal. We're getting used to this video conferencing instead of seeing each other in person.
Yeah, but it is the new normal, and it was up roughly 25% today, and that's a big deal because short term, if you want to understand what's going to push this market higher or lower, right now a deal getting done between Saudi Arabia and Russia to reduce barrels by any significant number is going to be a major positive for global markets. Period. It's going to be. So if that deal happens, we should see the markets moving considerably higher. If the deal does not happen, we should see the markets, back down. I think everyone kind of saw this happening. The oil market was actually up overnight even. So that was really the support today. If we didn't have that oil support today, I think the market would be down another 500 to 1,000 points right now, the Dow.
Yeah, and it was because the president tweeted about this last night, and so that's the market surged just on a tweet. It is, and then, like you say, they came out and confirmed that these talks are not happening. Nobody knows. This is the
no, but you have to assume.
If you tuned in for any clarity, if you thought that this is Dumb Money knows what they're talking about, and this is going to be the episode where we know if it's the market bottom, or we know if it's time to invest, or we know if it's going to be another crash.
Well, hold on. Watch the whole episode, because later in the episode, we are going to get granular with actual trades that we've done over the last 48 hours on stocks that we've been researching that are both long and short. I have some long and short trades that I'll kind of discuss with you just to get your brain working, and you guys should do your own research on these trades. Don't copy them. But I wanted to, I said something nice about Jim Cramer, which never happens. I do want to say something negative about Rick Santelli, on CNBC. He keeps talking about this, if you take the baseball bats away from the baseball team, they're going to bat zero. So none of this unemployment matters. That is the dumbest thing I've ever heard in my life. And he keeps saying it and saying it. Every time he says it, I just want to put my fist through the television because it's insane. Okay, so let me explain something to you, Rick Santelli. you didn't just take the baseball bats away from the team, okay? If the team had the baseball bats, their batting average would be like 50 right now. It'd be sub 100, okay? So you just went ahead and took the baseball bats away because it was going to be so ridiculously low. Okay, yes, we shut the country down. Yes, that is why unemployment numbers are going through the roof. But if we didn't shut the country down, you would still be seeing unemployment numbers going through the floor. It would take a little bit longer, and it would actually be worse because you knew they would be coming, right? Because do you think people right now would be employed in this situation? Do you think people would just be going out to concerts right now and flying all around the world and doing all this stuff if we didn't force quarantines? Absolutely not. That is the dumbest statement I've ever seen. So no, unemployment is down, not because we forced it to be down as a country. It's down because of this pandemic that we're in, and the fact that people don't want to be out there. Even if you let them go out there right this second, if you said, oh, do what you want starting right now, trust me, it would be at least 70 or 80% as bad as it is right now. And then people would anticipate it staying bad and getting worse way longer, right? And companies would be even more nervous because they'd be like, when is this going to end? There's no curve to dampen anymore, right? It's just going to be horrific. So what the government did by quarantining and work from home is actually probably helping long term, right? We all know that.
Pull all the damage forward, right?
Yes.
Sending it out longer.
Yes, but this unemployment is real. I don't necessarily think it's going to back this in 60 days. Do you? Do you think that like in 60 days everyone's just going to get rehired in droves? Like, I don't see that happening.
And there's so much, and that's just the uncertainty. I think that we won't really know anything until we start to see mortality rates decrease. That is kind of for me, that's the key indicator. So there is unemployment, there is oil, there is all of these other things, but that's the effect. The cause is we need to see mortality decrease. We need to see the curve leveled. We need to see a lot of things that will be the reason that things happen. And I think that we will, in advance of that, maybe the market will start pricing that in when we, predicting when that will happen, but we won't know for sure until we actually see it happening.
So I did send one tweet out on that note, Dave, to get even more granular, and it was this is basically the concept is that this small business program that the government is $350 billion, and we have small businesses, right? So my restaurant, for example, and your bar, we're both applying for that loan, that $350 billion. We want to tap into that. My restaurant is applying for about $350,000 loan based on our payroll and what's allowed. It's a forgivable loan. It allows us to pay our employees for the next, call it 75 days. Okay. Now, my restaurant actually has a little bit of extra reserves to keep, some staff beyond that period because I believe we'll be bad beyond that period. But what I said was that in the absence of another stimulus package for a small business that extends that loan period and gives us even more money, or a V-shaped recovery that is bringing everybody back to the world for the most part in early June 1st, let's call it June 15th, okay, or early June. I think that 80% of small business in America will shut their doors by June 15th. Okay, now I hope one of those two things will happen. I think it's not going to be number two, because guys, do you see everybody coming back in droves in early June? I would love to believe it. I just don't feel like that's a realistic possibility. I think we're more likely to see the government say, here's another $350 billion and give us more money for another 60 days, right? So what do you guys think? I mean,
and that's why I genuinely think that we are, we saw this little bit of a rally in the last week. I think we're headed lower. I don't see the people going back to buying immediately. Even once we're said, okay, social distancing, still be a little bit careful, but you're allowed to leave the house, go just be careful at restaurants. You're not going to go to a restaurant. You're definitely not going to go to a crowded bar. And even if restaurants have to space people out so that tables are 6-10 feet apart, that cuts your restaurant capacity in half. Even if you are at full capacity at your restaurant, your revenue is going to be half, and you make all your money on Friday and Saturday night when people come in as a nightclub at your restaurant. That's not going to happen.
Small Small
December?
business, the margins for every small business in America are like this big, and every restaurant like that big. Okay, so like the thing about Wall Street is they don't really understand small business. They don't. Most of them don't own a small business. They're not invested in small businesses. They don't actually see it. They're not on the ground, right, with us. So like I'm telling you that one of those two things has to happen, or June 15th, forget about it. I'm already getting calls from restaurant owners that know me asking if I want to buy their restaurant. I got those calls this week. Insane. Yeah. Jordan, what do you think? Do you see this, either of those two things happening, or which one?
Yeah, I mean, what I think is that let's say that, we get past this, the numbers start, just drastically declining. You're still, I think maybe a third of people are going to be comfortable going out and just thinking, oh, everything's fine. I think you're going to have a lot of people that are cautious for a while, right? And so it's going to be a slow buildup to be able to start adding jobs. It's not going to happen overnight.
Yeah, I think that people will be cautious to the point of, at least I know I'm going to be cautious. I'm not going to want to go to a crowded place, even once we get the all clear.
Yeah.
And I don't see that all clear happening in any kind of a timely manner. We're now being told that the best case scenario is 100,000 people die in 2 weeks. Yeah. That's a very real thing. And, what's going to happen in the next 30 days after that?
Yeah, somebody mentioned a vaccine, and I think they're right. I mean, when a vaccine is out, which, best case right now is spring of next year, then I think people feel really comfortable about going about their daily lives. But until that happens, or if there's like if you just have if you get it, if they figure out a pill that you take and it totally antivirals the thing, people will be fine. But
I don't think we have any idea that that's coming. And that's, I do want to mention this, I felt like sentiment changed the day after Johnson & Johnson was talking about how they're ramping up production, ready to crank out a vaccine as soon as a vaccine, they have one that they think is right, and they're ramping up production just in case. The next day is when the White House kind of changed their tune from everything's going to be all right to this is going to be a very difficult couple of week period. And that night, I was on the phone with Chris. I hadn't really been watching the market that day. I just had to take a break from it. And I was talking to you, and after hours, we were both like, yeah, this is the change from this kind of positive, good things are coming to this is going to get worse before it gets better. And that reality is starting to sink in. And during after hours trading, within minutes of the after hours market closing, that's when I bought a large short position in SPY. And I know earlier in the day, Chris did the same.
Yeah, I bought 200 put contracts on the SPY, and I had at the time 15,000 shares short SPY because I was kind of feeling like we're going to see a way forward. The timing was awesome because yesterday we got crushed. I got out of most of that this morning, a little later than I would have liked to, but I got out of it when the market was up like 200 points this morning. So I actually still have 10,000 shares short on the SPY, which is not that much of a hedge against my crazy long portfolio. So I'm way long right now, and I might go short again. But let's talk about these things. I want to make sure everyone understands the drivers clearly. So far, we have the drivers we have are unemployment, oil, and then we have how long the market perceives this will last, with more potential for more stimulus coming that could counteract that, right? More stimulus. So more stimulus coming would be a good thing. If more stimulus doesn't come and we see this stretching into June, like beyond the early June, that I think will be a major negative. And what's driving that is the curve, right? Which is what's a lot of the stuff that Jordan is doing. Jordan, could we share your site with everyone, or no? Is that just for us?
Oh, yeah, that's totally fine. It's
okay.
Just on McLean.com.
Okay, this is really cool. So Jordan has worked the last few days because, we're not meeting with startups right now and not doing a lot of advisory to startups. So Jordan has extra time, so he can't stop himself. So he created a really cool kind of widget using open source data that to essentially do comparison, really cool charts and comparison data on virus on positive cases, right? And so what's really cool about what Jordan did, it's on jordanmcclain.com. Is that right, Jordan?
Yep.
So what's really cool is that you can compare a state like Michigan. What state do you have up there? Everything's compared benchmark to New York.
Yeah,
so
this is the New York benchmark versus the overall U.S. But then if you scroll down, you can pick any state. So we are in Texas.
Yeah, this is
click
cool.
on Texas, it will benchmark the Texas curve versus the New York curve. And Jordan, you'll probably want to jump in and explain this because you'll do a better job than I. But these charts are in a log scale, and basically the angle of the line is what tells you. I should put my hand this way, I guess. The angle of the line tells you how fast the cases are increasing. So
basically the steeper exponentially, right? And so to be able to make sense of it in your brain, we're basically just looking at the acceleration, right? So we've it's like doing a derivative or something like that, but we're just looking at the acceleration, and we're doing it, and we're normalizing these against each other by counting since the days that there was 100th case, right? So at day 15, you can see that Texas was somewhere around 5,000 ish just by looking at this, and then New York was at just sub 30,000, so probably 25,000 or so. If you want to run the numbers, you could actually see what the actual numbers are, but that's the concept, right? And you can see Texas is trending slightly better than New York at day 15 is kind of what that's telling you.
Can we show Michigan, Dave? Because that was an interesting one.
Yes.
Listen, guys, this is so cool because in a lot of what's out there on the internet, you can't really dive into county level data, city data, state data, and you can on Jordan's widget. And you can. I love how Jordan does the benchmarks to New York because that's what everybody actually wants to see. So Jordan texted us last night and was like, "Hey guys, Michigan's the new New York," and I actually sent that to my buddy Jason Raznick, who is founder, CEO of the company Benzinga, who's in Detroit. So I was like, watch out, man. Jordan's scale here has this going way up in Michigan, so it doesn't look good for you guys.
Yeah, I don't think that our viewer traffic is going to crash your website, but if Benzinga starts linking to this, Jordan, you might want to buy some more Amazon storage space.
So I'll just scale it up.
Yeah, I don't think we'll throw it out there, but you never know with Jason.
Now, can you compare individual counties with New York? Is that what I'm seeing here?
It compares the county that you select to a group of basically just New York City, right? All the boroughs of New York City. And so it's not actually the county there. I forgot what the county is and how that's all divided up. But basically, I'm just taking the way that New York Times is presenting the data. I'm not collecting all this data. It's New York Times that's collecting it, and they've made their data source available for free. So that's how I've compiled this chart. But
and hey guys, if you're following and you have some cool data sources, feel free to share them in the comments, share them with the community, share them with us. Like I said, Jordan built this for us, and it's cool of him to share it with all of y'all. So it's jordanmcclain.com if you want to check it out. By the way, someone mentioned, I just kind of saw in the corner of my eye, are you going to talk about Luke and coffee? Oh, hell yes, we're going to talk about Luke. Okay, so I love this. I love that I went on record during our last show, which was Monday. Someone asked about Chinese stocks, and do you remember what I said? And we all talked about it. We're like, no, we're not investing in Chinese stocks because you can't trust their accounting at all, right? And so it's one thing when everything was going great and we're searching for value, so you might want to pluck a Chinese stock because things on U.S. markets were so ridiculous that maybe you throw some money in a Chinese stock. But during times like this, I absolutely had zero confidence in any Chinese accounting of any Chinese company. So absolutely not. And what happened this morning, guys? Did you see Luke and Coffee? They basically came out and admitted they're a fraud. They're fraud. The stock's down 70, 80%. It's insane. People have been rumored. They've been talking about this for months and months and months with Lucan being accounting scandals and the whole thing being a fraud. And they essentially came out and said, yeah, Yeah, we're fraud. So you notice Starbucks is up today this morning because of this. but like then I saw a really interesting comment on one of the Lucan chat boards, which is like, well, this is kind of good for Starbucks, but do we even really know if China likes coffee now? Because like maybe they don't even really like coffee. Maybe the whole Lucan thing was just not nearly as important or as big as we thought it was in China. So maybe it's a negative for Starbucks. I don't even know. But what I do know is that I am not touching Chinese stocks right now. And I think it will be really interesting to see how the ETFs that cover Chinese stocks do over the next few days, because will people just be pulling out of these Chinese ETFs right now? Because can you trust? And this is one of the biggest stories coming out of China this year was Lucan Coffee. It's the Starbucks of China, man. This is like a huge story. Could you go bigger on that graph, Dave, to just show them like what it's been like the past couple of years for Lucan? I mean, look at that, man. What a story there.
That's the 1 year chart right there.
That is, guys. Fraud. I love fraud. I hate it. I mean, I love.
He's going on the record
fraud.
saying he loves fraud.
I love uncovering fraud. Because I know it's out there, and I know there's so many more of these companies out there, especially in China. I don't trust them. Absolutely not. I'm not giving them any of my money. I'm sure there's good companies in China that do the right thing, no doubt about it. But you never know. You just never know. And by the way, it could happen here in the U.S. and it does. But way bigger in China of an issue, of a concern. So that's why we don't invest in Chinese companies. There's the answer. Lucan, now you know. I feel vindicated. So do you want to guys talk about some, we talked about what the drivers are of the market. The truth is, we really don't know which way these drivers are going to go right now. We do think we know about unemployment, right? We think unemployment's probably going to be worse than the market is thinking. And
the market already could be pricing that in. So that's one of those indicators that I think that there's less question about. We know that unemployment is bad, will get worse before it gets better.
I think it's probably worse than the market thinks, but we'll see. I think today the market would have been down significantly on that unemployment number, because the market in general, most sell side banks all came in at 3 to 4 million, and it came in at 6.1. But the oil saved the market, right? This oil deal, possible. Do we know anything about the oil deal? We really don't know. I would lean towards maybe there's some truth. I don't think Trump completely made up a phone call. He probably exaggerated his phone call quite a bit.
Or he imagined it, or he dreamed it, or who knows where that information came from?
It's possible. And then on the last one, which is really important, which is these charts that Jordan is creating and stuff, like how long is this going to last? All depends on how many more hotspots kind of happen in America. Michigan's a hot spot. Louisiana, we know. California, it's doing kind of okay right now. Will they stay that way, or will it like turn? Texas, we're doing kind of okay, but I actually, I spoke to someone. We have a lot of doctors in our neighborhood, a lot of surgeons. And we did my family walk yesterday, and one of the guys pulled over and was talking to us from 20 feet away in his car. But he had been in 3 hospitals in Dallas yesterday. And he told us that they were a little bit unnerved. They're preparing for the storm, but it hit yet in Dallas. Like it was still like they didn't have a rush. They weren't overcrowded. It hasn't hit yet. So it was just fascinating to me, because I kind of thought it would by now. Right.
My neighbor works at the Baylor in Grapevine, and she says the same thing. Basically, nothing's going on. They've got COVID patients, but it's not overwhelming yet. They're basically emptying out the entire hospital of anything non-essential, just so that they have the beds if they need them.
Well, Dallas was a little bit early to shut down restaurants and bars. They were not the slowest like you might expect they would have been, but other counties within the neighboring area, they were still, as of last weekend, saying that all businesses are essential. Keep on doing what you're doing. Go to work. Go shop. I think the mayor of that city owns some commercial real estate or something. It's just why are we not just all staying home and keeping this thing as under control as possible so that Dallas hospitals, maybe that's good. Maybe they will never hit that maximum capacity. But
But
knows?
how about Florida? Could we talk about Florida? This is the thing I don't understand. I don't understand. Florida has been the worst with social distancing, the absolute worst. They've had travelers in there, like spring break. They have old people, more old people than any other place in the United States. You would think that right now Florida would be blowing up with COVID cases. And I don't think it is. And that's mind-blowing to me. That's the one thing that keeps me really positive of, you know what? Maybe, just maybe, there is a weather element because Texas and Florida seem to be doing better than you think they should be doing right now. And
all the beachgoers at Florida, they just went back to New York. And
but Jordan, here's the thing. They can't. If there's crowds in Florida, there's a ton of people that are still in Florida. It's one of the most populous states in the country.
A little bit. I agree with you.
And they'll get in the hospitals. The hospitals get infected. Everyone, the same way it happened in New York and every other place, right? So, like, what is going on? Can you guys figure this out? It makes no sense to me. It's positive. It's a huge positive, right? You have to see it as a positive. So either these Texas and Florida and California also kind of like you. I mean, California, guys. Tons of apartments in California, tons of like travelers and international and all. LA, come on. I mean, do you see what I'm getting at here?
The commenters are saying it's the heat and humidity in Florida, but we just saw new data out of somewhere, China maybe, that there was that hot bath thing that there was a major outbreak that happened there. So,
well, I don't know, guys. All I'm saying is, like, there's a positive side to this story that you have to. We'll know this will unfold over the next week. Would you agree that if Texas, California, and Florida, 3 monster states with mega travel, right? If these states don't get hit hard in the next week, that is a huge positive for the market because it means that, okay, it's just the northern states like New York, Michigan. They were early. They're going to come through this, and maybe sometime in June we can kind of start getting back, and then the market's going to see the light at the end of the tunnel. I think that's what I'm looking for the next few days. I'm studying those. I'm going to use Jordan. I'm going to be all over JordanMcClain.com with those 3 states, looking at them.
Yeah, I'm a little bit behind. So World Meters, I also like to look at those guys because they have intraday stuff. My stuff really only updates at like 9 or 10 a.m. whenever New York Times updates their daily numbers. But yeah.
Anyway, I think it's, I don't know, there's a lot going. So at least we know, listen, we talk all the time. You have to have a prepared mind, right? So
was that a dry cough? Are you okay?
I just choked in my water. So we talk all the time that you have to have a prepared mind. You have to model out scenarios, right? So that's what we've done in this episode. Like, that's how we're thinking about this. That's how we're strategizing. We now know what to look for. We think we know what's driving this market, and we will evaluate our short hedges intraday, all day today, all day tomorrow, if any of those 3 drivers appears to change positively or negatively. That's what's driving our decision making on whether we hedge our portfolio 0 or 100% or 120% or 50%. That's how we make our decisions. Okay, guys? So that said, let's talk about some specific trades that we've looked into and talked about. And a bunch of these actually came from our subscribers. And I would please, guys, when we end this episode today, obviously like the episode, please thumbs up it and hit the notification link, but leave comments. Tell us what you're trading. Tell us what you're researching. If we see something that's interesting, we're going to start researching it too, and then we're going to share that with you guys on the episode or in the comments. I wrote when I put this one line in my book that I think is really prolific in how we think about research and institutions on Wall Street. You think Goldman Sachs is a big staff and Morgan Stanley and JP Morgan. Let me tell you something. Their staff is not nearly as big as as what we have access to, right? If we collectively share our insights and research together as individual kind of retail traders, also our backgrounds and our demographic background and our geographic proximity. We are seeing things on the street here in Texas, wherever you guys live. You're seeing things that these teams up on Wall Street working these sell-side banks, these hedge funds, they do not see what we see. We have way more diversity if we collectively share insight and research and what we're seeing with each other through this channel, through the comments. We have more power, right? More data, more research, more insight, more intelligence than any sell-side bank on Wall Street or any hedge fund on Wall Street. And believe me, I know them all. I know them personally. We spent years working with these guys. So don't think that we can't do what they do better. Okay. So guys, have you done stocks that you've looked at or we talked about the beer, like Anheuser-Busch, I think, right? People were commenting on, and we had a little bit of an internal debate on our liquor sales and beer sales and wine sales, Constellation Brands. Are they up or down? Is that a good investment right now? Is that something that we would invest in? What do you guys think?
Yeah, I saw a headline, I thought, on a major news network that says that it's up temporarily.
Let me tell you about that headline.
That news, you know about this news source. So we were basically saying that alcohol sales are down, and then on the Today Show, I hear the first thing in the morning, their headline is alcohol sales are going up, and it's companies like Budweiser because people are clinging to the low cost essentials, and the report also said that people are stocking their liquor cabinets with spirits. But go ahead, Chris.
So this is so funny because at the same time, I also had a friend that I was kind of ripping on when they were like, oh, alcohol sales are up. And I was like, no, that's only you that's drinking more. And that's not everybody. It's just you. And then they sent me the article and they're like, no, here, it's not me. It's everybody. And so I immediately said, well, let me look into this. I started reading the article. The article, which I think might have been Today's Show source as well, because it all hit at the same time, was all coming from a research report that was based on a company that makes breathalyzers, and they're connected breathalyzers, kind of like the connected thermometers you keep hearing about in the news, measuring people's, mapping out where people are having fevers. And the breathalyzer data that was coming back was 38% higher than it had been the month before. First of all, who the hell has breathalyzers in their home? Or are these people that have to do it because they had a DWI? Like, what? Who are these people with the breathalyzers, the connected breathalyzers, and you're basing research off of it? You're going to tell me alcohol sales are up because your breathalyzer data was showing more alcohol on people's breath? Listen, for a guy like me that spent 10 years working in the market research industry, like, that is the dumbest thing. I can't even believe people are writing articles on this. So let's talk about alcohol sales.
I've been trying to find the report and what they actually quoted. This is from CNN Business, saying that alcohol beverages shot up 55% in the third week of March compared to the same time a year ago, according to Nielsen. So this is a Nielsen report. So
here's the deal. So what they're referring to, I'm almost positive, is alcohol beverages at retail. Okay, so they're checking SKUs. Obviously, alcohol sales are going to go up at retail when everybody's at home and can't visit a bar, and so you're going to stock up initially. You're going to front load also, right? So you're going to front load when you're doing all that grocery shopping the last 3-4 weeks. Everyone's front loading. But understand this: every bar, every restaurant, every casino, every sports stadium, every concert hall not in America, in the world.
Yes. And that's the thing.
Okay. And some of them are doing delivery and whatever. It's just nominal,
it's a very small part compared to what has been historic. And you're right. It is retail sales they're talking about. And if you look at the percentage that normally grocery stores and liquor stores sell compared to the social version of drinking at bars and restaurants and nightclubs and sports stadiums, it's a small piece of the pie has increased or doubled, but that small doubling didn't actually change the bottom line.
Now
But it was an interesting report, and the things that moved up were the generic things. So pre-made spirits, ready to drink cocktails were up 106%. Buying at grocery stores, but their sales were like zero, and now they're doubled.
Jordan, you said you're drinking a couple extra glasses of wine a week, right? I mean, but you never go out, so it's not like you're missing out on when you go out and drink at bars, because you don't go to bars to drink out. So for you, since you're home, you're having an extra couple glasses of wine a week probably. But me, I said my alcohol consumption has gone down. I probably average 4 drinks a month. And I think I had half of a beer the other night. And so I'm down by like 80% on the month, right?
The other half of the beer.
You know what? Like I thought I really wanted a beer the other night. So I was, it's just, which is rare for me. But I have like 9 beers in my fridge that are probably 6 months old. I think this one was bad. It was Modelo, and I like having my Modelo with the lime. I didn't have any lime in the house because, we're going through a pandemic and we're short on fresh fruit in my house.
I have lime. If you need lime, I can leave some on my porch for you.
And it just didn't taste the same without the lime. So I got halfway through it and I was like, And I was watching what's it called on Netflix? I don't know, it was Tiger King or Ozark. I was watching Ozark and I got into it. It was whatever. So I'm down. I think, listen, liquor sales are down, beer sales are down, everything's down. That's why you have companies like Anheuser-Busch trading down so much, right? And Constellation Brand. Now, are they good trades right now?
Bud is actually up today, just for the record.
Today.
But that's probably on this report that nobody read any deeper than the headline.
No, but they're all down for the last month. Like they're all down off 20-30% from their highs. You know what I'm saying?
And this same article says that they're predicting that 20% of restaurants and bars will never reopen.
And that's why I'm not like super rushing to get back into the alcohol. It's not like one of my big picks right now is a rebound trade. I'm sure they'll rebound. But listen, like we said last episode, we're looking for stocks. I think we all agree on this, where the change in consumer behavior will actually have a positive lasting effect after this whole pandemic is over. If you think about Budweiser, Anheuser-Busch, and Constellation Brands and wine sales, the change that this is going to have on society is going to have a negative effect because there'll be net less bars and restaurants. People will be slow to get back to partying in big groups and going to concerts and casinos. So I think that's actually a negative, not a positive. So we have other trades that we've made where we think the change in behavior will actually be additive even when this is over, right? Those are trades like, ordering food from home, like Amazon, and spending more time streaming, Netflix, Roku, also Amazon from AWS, right?
And can we talk about Apple too? Because we've been watching the trends data on Apple and their products, and the spike for iPad searches on Google is unprecedented.
Incredible.
It's like it's beating their December, Christmas time.
Can you show the 12-month on that? The 12-month trend.
Up.
This is great, guys. So, listen, we're going to talk about some REITs here in a minute that I think are really cool REITs, but I agree. Let's talk about it might seem obvious, Apple. Everyone's talking about Apple, but I truly think this is unprecedented. I mean, some of these search tags, when you look up search traffic for Apple, the iPad. And listen, I know this because the first thing I went to do when I realized my kids were going to be home from school for the rest of the year, I was like, I should probably buy them new laptops. Of course, the school then said that they were going to let us take laptops from the school. So I ended up getting 2 laptops from the school. And of course, I hired like a TaskRabbit person to go there and pick it up for me because I didn't want to, be in a crowd.
Then you emptied a can of Lysol on it before it came into your house, and then you let it sit in isolation for 2 days. I know how your house operates. I'm trying my best to be to follow your lead on that.
Oh man.
Okay, I've just about got the chart pulled up here.
So it's not
I by the way, have ordered a bigger monitor so that I can do more things at once. That is my big purchase for
what do you think people are going to buy with their government stimulus checks, $1,200 checks, right? That they get, or $2,000 checks to have a family. They're buying new phones, new laptops, new iPads, right? Look at that chart, man.
Yeah, this is iPad 12 months.
Guys, that jump is like almost at peak levels for Black Friday and Christmas week. Like, that is insane. That is insane. Like, you're telling me that Apple potentially coming off their holiday season, and know what's so cool about that? This is what's really important. People don't understand this about search traffic. Do you see how that last spike in March, how it went sideways? It didn't peak and come right back down. You don't understand how rare that is. I do,
because people are setting up their home offices and.
Yeah, it's sustained search traffic. Sustained search traffic. Listen, this is all I do. All I do is look at data, right, to trade. That's all I do. And like one of my biggest trades ever was a trade on Netflix when the first Stranger Things came out. We remember, Jordan, through ticker tags, we were basically looking at mention frequency of people speaking about Stranger Things, right, on Twitter and on various social sites. And we looked at every show that Netflix had ever made in the history of Netflix. And what happened with Stranger Things is normally a Netflix show comes out and it spikes and comes right back down. But with Stranger Things, we've never seen this before. It spiked and then went sideways. And for 30 days straight, 45 days, I think, straight, they just kept that same sustained level of chatter about straight. And we came out with a report at our company at Wall Street, and we said, we think Netflix is going to destroy earnings because this is the biggest driver that we've ever seen in the history of Netflix. Every other data shop on the street came out with a negative report on Netflix that quarter. In fact, Netflix is trading down big in going into earnings. Beat earnings because of Stranger Things. The stock jumped 20% after hours. It was one of the biggest calls we've ever made. But the moral of the story is to get that type of sustained, that sideways chart movement in search traffic is so rare. That means
Chris, I just want to
buying...
point out that this I pulled up the worldwide chart. We were looking at USA first, and the worldwide chart actually has iPad hitting that 100% line, or almost at 100%, and it was a multi-week run up. But again, these 2 weeks, it had an increase from the March 22nd through 28 to the March 29th through April 4th timeframe. And we are at 100 right now for iPad worldwide.
Guys, just seeing that to me, just like gives me goosebumps. I never see charts like that. I look for them. Look at that. Look at that. You never see a bump outside of the holiday season. It's never happened. So if they're truly selling that many iPads right now and truly selling that many MacBooks, because the MacBook chart looks pretty strong as well. And so I think even the iPhone chart they got a little bump there too. But man, this is unprecedented for Apple. So I bought an extra 1,000 shares of Apple. I got 5,000 shares of Apple now in my core account. I think I have another 1,000 in my IRA rollover account. So now I'm at basically 6,000 shares of Apple. And, it's risky being that long in anything right now. But Apple's one of my favorites coming out of this because I think they're going to do strong, reasonably strong through it. Now, I think Apple sales will be down. We all know they're going to be down. I just don't think they're going to come down as much as people realize.
Look at this. This is remarkable. This is the MacBook chart for 12 months. That is... oh, man. That is a 12-month high for MacBook.
Gosh, it's absolutely incredible.
But here's the deal. I mean, are people searching online to buy online where they would have just bought in the store?
Yes. Well, yes, they are, and that's part of it. But it doesn't even matter. Still, the search, you'll still see, Jordan, that just the general search traffic, because people, as you know, they generally research before buying, right? So most people are going to buy an iPad. There's some people that's going to go to the Apple store, old school. But most people, whether they buy it online or from the store, they're going to start researching different computers on their computer. You know what I'm saying? They're going to look at iPads, and they're going to look at pricing and look at the competitors to Apple. And so this is it's not a pure correlation between sales by any means. but it's a hell of a good signal for Apple. So yeah, Apple's a big one. So another one.
I need to buy more Apple. Clearly, I have Apple, but I need to buy more.
I know. I'm waiting to buy some Apple and Microsoft. I'm just like, when is the right time?
Oh, I told you not.
You can't pick the time. Now, this is another thing that, you know, and I'm all over reading news stories and trying to figure out what other people are thinking. The stats on what happens if you stay in the market during a crash versus try to get back in. If you are a week late or a month late on getting back in, the like 1 year difference in your portfolio value is like double. It is like these stats that I don't know who does this research, or, you know.
You're always better being early than late. You're always better being too early than too late when it comes to investing, essentially, right? So yeah, Jordan, if you're going to make a mistake, be too early, not too late. Yep. Especially if you can hold through the bad period, which you can.
If you can just stay in, that is typically the best option. This
or dollar cost average. You can't go wrong with dollar cost averaging. You don't have to make any big decisions.
It's proven not to be the most effective method, but it is a good idea. This cumulative returns following a market bottom. So if you stayed invested versus missing the first month of recovery or the first 3 months or 6 months, look at that difference. In 2 years, your portfolio nearly doubles versus going up 50% if you missed that first month of recovery. So this is the argument for not doing anything, keeping all of your investments, which is what I've done. The only thing I've done is buy selectively more things that I want, and I still have cash on the sidelines. I feel like I shouldn't be timing the market. I should just go all in. But this is
well, Dave. I mean, listen, we are active right now. We're active investors. Like, this is what we're doing
too
all day
active,
long.
probably.
We're too active, and it's high. What we're doing is high risk. We're trading in and out of the market. This is not something that most people should do. But if you want to know how we do it, what the drivers are, how we strategize, that's how we do it.
And I'm way less high active than you. I haven't done anything other than my SPY short, which I also have 10,000 short shares. How's the SPY doing right now?
It's up.
It's like the Nasdaq's up 2%.
So,
yeah.
So, you know, it like I said, the oil's propping it up and keeping it up. Hey, so there's another company I think we should talk about.
Before we do, I want to remind people that we will be getting to questions in the live chat. So if you're standing by waiting for us to get to those questions, we're going to start at the top probably and work our way down and answer as many of those as possible. And if you're watching the replay of this, we do for the next 48 hours to 72 hours, we'll be going back and responding to comments that you leave below the video. You can't leave those during the live show, but the chat maybe is archived. Sometimes it disappears. But definitely let us know your questions, because we'll be getting to those in probably 5 minutes.
One of our followers left a comment for us after the last episode that I read, and I was like, this is actually a really interesting stock to look into. Plantronics. Plantronics is a headset maker. It's a corporate, enterprise headset maker for corporate communications. They also own the company that does all the conference room equipment, like those conference phones and stuff. So they're essentially, it looks like maybe the ideal company for this, right? Like corporate headsets and corporate communications and headsets and all that stuff. Plantronics. The company's gotten crushed. They're down like 80%. They had a really bad quarter before the pandemic.
They've had a really bad quarter, multiple quarters. So they've not had a great year, and they have been beaten down even more. But last week we were looking at Turtle Beach as a headphone play. Plantronics is they make headsets. They also make the boxes, the speakerphone boxes, and all of that sort of thing.
Yeah. So here's the thing. I was wondering. I'm like, it seems like they would see a spike in business right now, and yet the stock is getting crushed. I mean, it's down 50% in the last couple of weeks. So I thought, this is one that's worth looking into at least, because listen, Turtle Beach makes gaming headsets for gamers. Plantronics makes headsets for enterprise, companies, for workers, right? And it makes intuitive sense that in this new environment, they should I think, see a spike. But the companies that were doing really bad before the pandemic, I think the general kind of sentiment is sell them, sell during the pandemic, right? Because if they weren't doing good before, then the pandemic happens. Now you really got to sell these companies. Yeah. But maybe that's unfair, because could we pull up a Google search chart on Plantronics, just the company name Plantronics? I think it's fascinating because you're going to see a spike. The first spike in a very long time. So there's a case to be made, I think, that maybe, look at that maybe Plantronics is a beneficiary of this work from home. And listen, love them or hate them at long term as a company, they might show a better than expected quarter here. And with that much of a downdraft in that pricing action on the stock, and I assume a ton of people shorting it, and like you could see a big pop in this when if and when the company comes out and says, "Hey, guess what, guys? Our sales were actually up."
Yeah, and I think we need to look though and try to figure out, what their production capacity is, what their inventory on hand is, if we go back and look at some of their previous earnings reports, we should be able to get some data around that and have an idea of, even if they had a lot of demand today and they sold out, are they sold out and they can't do anything else for the next 3 months until they ramp up and start making more headsets? Because a company like this that has been going down and is getting beaten up, and it doesn't have a huge customer base over time, a giant spike in demand for their product overnight doesn't necessarily mean they're going to come back and be a winner.
But Dave, here's the thing. The company was actually doing really well not that long ago. Like, look at if you go a 5-year stock chart on them, like they were doing really well and just had a few really bad quarters. They missed expectations. They had a big acquisition that didn't kind of add as much as people thought. And then like just you see that? So like, but if you,
that's one day. Here's 5 years. Let me take Amazon off. That's my benchmark. For everything.
All right. So
that's the SPY.
Oh, Plan at PLAN. Tronics. There you go. PLT is a symbol. PLT.
There we go.
There you go. Okay.
And this is 5 years.
Okay. So they were not, it was really just late 2018 when they started that kind of downward momentum. But right up in 2018, look, I mean, they drove all up to $80 a share. Now they're at $8. Listen, I did not do enough research on this company, but if you have time and you're looking for what I would really consider to be an undiscovered potential beneficiary of the pandemic, a stock that a lot of people are probably not focused on, this is a stock worth doing some research on. Make the phone calls, look at their past conference calls, right? Listen to those calls, read the transcripts, call the company, see if they still have inventory. I bought shares today. I bought 1,000 shares of Plantronics this morning, even though I didn't do the research, just because, you know what? I see enough. I'm just it's a highly speculative trade. As I do more research on the company, I might pull that trade off the table. If I see things I don't like, I could double or triple it if I see things I do like. But I just, I threw some money on a speculative position this morning. And I want to thank whoever threw that one at us. Plantronics is a company I know really well. We've used it for many, many years at our companies. But it's not one that came top of mind. So it was a great, great addition. Want to talk about some REITs, guys?
I don't know if we should talk about REITs today or if that should be what we talk about on Monday, because there's an interesting play that we haven't really fully done our research, and you've done more than I have. I've read the 2 articles that you sent me.
We have 2 interesting REIT trades. We're going to save them for Monday's episode. Because they're not going anywhere in a hurry. I think they'll still be around at a pretty good price on Monday, because I do think we need to dedicate some time. We need to talk about REITs, how REITs work, the upside, the downside, why we think these REITs that we found are super interesting. Guys, hedge funds, I talked to a few of my old hedge fund colleagues this week, and they are focusing deeply on the REIT sector, looking for value in the REIT sector. So that's what honestly got me thinking a lot more about this. I'm like, hey, if these guys are spending that much time, why don't I spend some time and maybe I can find a couple REITs that I think are interesting, and we did. So Monday's episode will be all about, what is perceived to be the riskiest and the most at-risk segment of this market right now during the pandemic, real estate investment trust. We're going to do that on Monday, and we'll tell you our top picks for REITs on Monday. What do we have that's non-REIT? Do we have anything else we need to talk about, guys? What about FLIR? Did any of y'all look into FLIR, FLIR?
I did not.
Did you guys look at that company?
FLIR.
That was another FLIR Systems. Okay, this is what I want to talk about. FLIR Systems.
They launched a thermal sensor solution for industrial monitoring and elevated skin temperature screening. Is that the right company?
That is the right company. So I want to talk about this because I have not researched it yet. But again, if you're watching this show and you have time and you're looking for an interesting trade opportunity, this is one you should research and share your research with us because I haven't started researching it. The thesis that one of our subscribers had was that once we go back to life again, that all these companies and the government and concert venues and airlines at the TSA, essentially everyone's going to want to take your temperature, right, before you're allowed in a concert venue or before you're allowed to fly in a plane. Or how about this, before you're allowed in the office building, right? So what if that is, because I'm starting to hear a lot of buzz. Have you heard the buzz about this? Like everyone's gonna be wearing face masks, temperature checks and stuff. They do it in China. What if that becomes a global thing, right? What if that becomes a global thing? This company appears to be a company that makes that type of, enterprise level temperature checking stuff. Now, I don't know if it's a tiny piece of what they do, a big piece of what they do. If it has potential to be a big piece of what they do, this could be an undiscovered trade that, again, is like one layer deeper than where everyone else is looking because you're getting ahead of the game a little bit. And that's when you could find the most interesting opportunities. I haven't bought any of this company. I want to look into it. I think let's talk about this in detail on Monday once we've had an opportunity to research it more. But, one of my favorite trades was, after 9/11, which is another kind of anomaly event, the second the market opened up, I bought shares in this company that, when you go to the airport and they take your luggage and they put your luggage through a separate deal, that was all starting right before 9/11, 2011. So I was 2001, excuse me, right before 2001, that company was around. I bought shares as a public company, pretty small. And I was like, this is going to be mandated at every airport in the world, no doubt about it. Because they were already trialing them in airports. Sure enough, it was mandated at every airport in the world. And within 4 months, GE acquired the company at like a 2 or 3x for what it was trading at. But again, it was just kind of like, I was just a little bit, and by the way, right after I bought that stock, it everyone else started to get the same thesis. It ended up in articles. So what you're going to see is this could be one of those trades that people start writing about in May, right? And then it starts attracting attention, and then other investors get caught up in it. So you want to get ahead of these things. I have no idea if there's a trade here, but now's the time to research it. So cool, we'll research that collectively, and we'll talk about that Monday too.
Let's just start flipping through some comments here if you want.
Yeah, what do you guys see?
I have a T. Rowe Price 401k through my employer. Prior to the crash, I reallocated my investments to a conservative portfolio. Is now a good time to move to an aggressive portfolio?
Well, okay, this is a good time for us to remind everyone that we're not financial advisors, and you should not take financial advice from us. We don't know what your risk tolerance is. We know what our risk tolerance is, so we share our trades with you.
That's all we can do is we can talk about what we do. And if you can apply that to your life and think about your own portfolio and your own situation, that hopefully is helpful.
This is
me, I'm also in not a conservative portfolio. I'm in a fairly aggressive long portfolio with a fairly aggressive short position to neutralize. I'm essentially sitting on the sidelines right now, and a big swing in either direction I'm not going to benefit.
Yeah, I think this is the type of situation where I intend to get more aggressive as we go through this process, right? So as we get through, we keep talking about this, the bottoming process. If we see a point of capitulation, it gets really bad, we retest low. I can see myself getting way more aggressive. I already have. My portfolio is longer than it was 3 weeks ago by a mile, right? And so, yeah, I mean, for me, I have a lot of risk tolerance. So when events like this happen, I'm going to throw on the risk. But that's not necessarily the right thing for everybody. But that's what I'm doing. Jordan, how about you? You going to get riskier as a result of this for yourself?
Yeah, I mean, I think you have to, right? When the government's throwing around that much money, it's bound that some of it's going to end up in major corporations. So I think if you are fully sitting on the sidelines right now, you're going to miss out. So I'm just, I'm doing what you're not supposed to do, and I'm timing the market, basically. I'm waiting for the next shoe to drop, and then I'm going to buy. But I know exactly what I'm going to buy. I've got about 10 stocks. I've got my list, and I sit there and I look at them every day and just see, is this the time that I'm going to pick up more Microsoft? Is this the time that I'm going to go pick up more of all these, things that I really want to have?
Yeah.
But you also know how much
I'm
cash you
already
need
in
too.
the stocks that I want.
What's that about cash? What's that?
You also know how much cash you need to feel secure in your portfolio, and you're not touching that cash. That cash is always going to stay there for yourself, right?
Yeah, what I like to do is I like to keep enough. I mean, I don't have a job, right? So I like to keep enough cash that I know that if a 6-month event or a 1-year event happens, that I don't need to go selling things to be able to live. And so that's kind of how I play it.
Jordan just never believes me when I tell him that this is his job. Like the work that you're doing right now to figure out your portfolio and the startup company, the 60 or so startups that we're invested in and consulting every day. That's a job, dude. That's a job. So
it's sometimes considered a full-time job. Hey, by the way, gig workers not included in unemployment claims. Stephen Malik is commenting that.
That's not true.
That's not true. Gig workers are included. Gig workers have to apply, but it's everyone who applies that gets counted as a part of that new 6.6 million last week.
Gig workers can apply and are eligible for the federal unemployment. I think now state as well, I believe. But I know they're eligible for the federal unemployment. Contract workers, 1099, independent business owners. This has never happened before.
It's a very different way of looking at unemployment because, people who work for themselves are now able to claim unemployment where they would have never been able to qualify before because they've never reported wages because they're not, they're basically paying themselves as a part of operating their single person LLC or whatever it is. Our buddy Michael Crockett says New York and New Jersey systems are down. I'm not sure which systems he's referring to.
That's unemployment. I bet he's referring to that because I was talking to a friend this morning, told me the same exact thing. They could not even apply, which was insane. But
what that tells you is there's just so many people trying to use it right now. You know what I mean? And so.
Well, yes. Exactly. Which truly is insane. I'm trying to pull. I found the site that we can refer people to. It's essentially your unemployment. It's a central site that you can go to. It's called careeronestop.org. So it's career ONE stop.org. And that will basically help you understand how this unemployment's working, and it will push you to your state site and stuff like that. I just had a text string that some of my older employees were using that this week. Let's see here. What do we got?
So there was a question, and then I think I went over the question and hit the wrong button.
So how about
there was a question about do we think that consumer staples are coming back? I believe that was.
We talked about that question is right above. So here's the thing, guys.
Because I think that we just ended the worst quarter in history, and we're about to see financial results from companies during that time, but really just the last month of that quarter was affected. So these numbers are going to be kind of like, here's how these companies were doing back when things were okay, and then it started slowing down. What do you think about all of, what should we look for in these earnings that are coming up? Should we basically take this as the ones that are doing good are going to continue doing good, or should we try to look at the drop and what happened in that last month of the quarter?
So consumer staples, what they're asking about, I think will be really good, right? We all kind of know that. Consumer staples, their sales should be way up. But the stocks are trading to reflect that already. So people are expecting great earnings out of all the consumer staple companies. They're going to get great earnings. So I don't necessarily there's nothing there for me to arbitrage. I don't necessarily see a huge piece of meaningful information or data that I think the market has missed when it comes to consumer staples. So I just don't have any opinion on it. I don't know how the stocks are going to react. But for me, we like arbitraging data and information here. That's what we do. So there's not a huge opportunity for us there. Similar thing, Robbie Cope at 1108 is asking us about blockchain and cryptocurrency. Why you guys not talking about it? People's faith in the monetary system is going to come crumbling down. Let's talk about cryptocurrency. Guys, we don't know. We don't have cryptocurrency pedigree here on Dumb Money. It's not our thing. It's not what we do. We don't spend time on cryptocurrency. That doesn't mean that cryptocurrency is bad or that it's not the next big thing. We will talk to you about things that we have expertise in, sectors that we've been trading for decades, where we have deep intelligence and we're able to arbitrage data and information. There are a lot of people out there that they spend their whole world on cryptocurrency 24 hours a day. They probably have awesome YouTube channels. I would refer you over to them. We're not a crypto channel, and we will never sit here and tell you opinions about something that we know nothing about. So
when we don't know, we'll tell you we don't know. And when we do have an opinion, we'll share that with you too. We're very transparent, and we tell you about every trade we make. And that's what's great about this channel. We get ideas from you guys. We give you guys, it's an exchange of information that I don't think we've ever had access to, just random people telling us what they're looking at, and it's interesting for us.
Yeah, I'll take a Wolf of Dubai, who's one of our regulars at 1111. I'll take one of those fights, those boxing fights with Rick Santelli on CNBC. I just think he means well, but I think he's missing the big picture. That's all. I mean, nothing against him. He's just missing the big picture when he talked about Chicago Cubs not having baseball bats, and that's why they're batting 0, and that's why employment's up. It's not anyone's fault. It's the government shutting it down. BS. This is unemployment. You can't stop it. It would happen regardless of what the government did. Shopify. We should talk about this. J. Dave at 1112. Shopify dipped a ton the last 2 days. I heard that part of that rationale on Shopify, guys, was that I was looking this morning to kind of figure out what happened with Shopify, but I know that Zoom kind of got popped right today, and they were down. Zoom Media got down, and a lot of these kind of momentum stocks, like Shopify's kind of momentum stock, I think just kind of came down with it. I don't know of anything meaningful that happened to Shopify. I do know that they did come out and essentially postpone, basically have no opinion on future guidance. Right. So, and they reported earnings for like January, February, but wouldn't report on March, I guess, wouldn't speak to March, which is kind of but what do you expect them to do? I mean, listen, Shopify is going to be down right now. The stock is down. It's a momentum stock. It's a highly valued, the stock has, the PE is through the roof. Is Shopify, listen, the reason why we love Shopify is we believe that when this ends, Shopify is going to be one of the leaders coming out of it, right? When this ends, e-commerce will be stronger than it is today. They're going to get hurt through the pandemic, but don't you guys agree that once we get out of it, I heard some reports out of Italy that people said that Shopify well, like people were running to Shopify in Italy to set up online shops, like and that's just a microcosm of what's happening in the world.
Right.
But,
Since you can't do business in your store, so you might as well open up a shop online and be able to at least do something. Right?
And Shopify's how you do it, right? Shopify's just how you do it. So I don't see how they don't come out of this stronger. And it's one of those stocks that they're just hot. They're on fire, right? Everybody, when we get out of this, everyone's going to want to be in Shopify, I think, just like they were before. So,
and then the Zoom, you brought up Zoom. I think the issue there is that there's been all sorts of issues with
security
popping in, security. Elon Musk came out and talked about it.
They're addressing that. 200 million users this month. Wow, that's an insane amount of users for Zoom. I'm not selling my Zoom, and as I always said, when we come out of this, Zoom is likely to drop. And I'll probably double down on Zoom when it has a big drop when we come out of this. I do have my core position. I'm not touching it. I'll deal with it if it drops. Shopify, I might add more. You guys, do you have Shopify, Jordan? If not, this could be a good time to pick some up.
I'm actually looking. I might buy Shopify today.
Yeah, it's down 40-something points. I don't know if it's down less now. When we started the show, it was down 40-something, I remember.
Yeah, it was down, and I own Shopify. I also have some Shopify calls. I was hoping to get some more, but those are way out of the money now. But I do definitely want to get more Shopify. I had to jump into the administrator interface so that I could block a spammer who was filling up our stream. Sorry about that, guys. That person is no longer here, and I'm going to grant administrative access to some people that I know. Leon, if you're wanting to be an admin, I know that.
Yes, definitely. Hey, Lynn's watching. Lynn, our buddy Lynn is watching right now. So 11:13. He's telling us that Italy just reported another 4,600 cases and 760 new deaths. So Jordan, looks like you've been on top.
That's okay. I mean, at their height, they were reporting like 6,000 and 7,000 a day. So it's a lot, right?
But it's going sideways now, though. Is the problem? It's not. It dropped and then like went sideways, right? Yeah. Like it's not dropping more. Sideways. Yeah. So that's kind of concerning because I think the hope is that we went up and then we'll kind of come down. But what's happening is we hit that peak, then we come down and it goes sideways. And if that happens in like New York, where we kind of hit our peak, go down, and then go sideways for a while, that would suck.
Yeah, I know. Well, what I think is happening there is that the northern region was hit first. Right now, I think the southern region is going through it, so that's why it's kind of sideways looking, even though the north is recovering a little bit. The sideways action is down south.
Okay. Yeah.
So it's basically like another increase, but
4th of July, it's going to be the weirdest thing ever. Yeah, I don't know what we're going to do for 4th. This summer is just a big question mark. We just canceled our kids' summer camp right before the show today, and it's not going to be great.
Somebody brought up insurance. I don't remember who it was, but that's a good point. So like, there's obviously fewer auto accidents. Mortality is going down, so maybe life insurance companies are benefiting.
So yeah, I thought about this one too, and this is one of the ones I promised to research and didn't. So we need to research this more, Jordan, between now and Monday. Maybe we can talk about this Monday.
Yeah, it's very interesting.
Here's the problem with insurance, though. Just to throw this out there, insurers make money by, obviously they charge premiums, right? But then they take that money and a lot of them invest that money, right? So they're taking all this money just in case something happens. They have to have all this money, but that money is being invested, earning returns for the insurance company, right?
But so in like AAA bonds and stuff like that, there's no way they're doing anything risky with it.
No, I was going to say, I think normally those insurers aren't even allowed. I don't know if they're even allowed to do AAA. I think they have to do like treasuries and like money market. So like since those rates are coming down to zero, that could really impact the amount of money that those insurers can make on all of your money that you're paying them, that they have to hold in that account. So that's a net negative for them. Obviously, also, they are losing. They are going to see a hit. You're saying less people are dying because they're not dying in car crashes and doing crazy stuff. Is that what you're saying, Jordan? Yeah. But we are going to see a pretty big, if we hit 100 to 200,000 deaths from this pandemic, that would be a big deal for insurers. So you just gotta weigh.
So far, the death rate overall, like all cause mortality, it's a visually stunning drop.
Because we haven't seen a lot of deaths yet from the pandemic, because the deaths are back weighted, right, from the pandemic. So it's like we have the transmission first. The deaths happen like 25 days later. So even in New York, there's just
drop off is so big that even a crazy number like 200,000 deaths
would impact it.
Yeah.
Oh, okay. No, so
you again, like they're still not dying in auto accidents, right? So
yeah. It's an interesting trade because the insurers they're all down. So we need to do some research before we can talk about it with confidence.
Mm-hmm.
Oh, that's interesting. Airbus is down from 130 to 50. That's a company we don't really look at since it's not a U.S. based company, but it's kind of similar to Boeing, right? I mean, 130 to 50. So like Airbus is Boeing without the 737 mess, right?
Yeah.
So if you were going to invest in one of them, wouldn't you rather have Airbus over Boeing now? Because like Airbus could theoretically be back to normal within a year and a half, maybe, to get orders again. But it still kind of stinks for them because like if this thing lasts very long and airlines go down. By the way, what do you think about the airlines? Like I sold half of my JetBlue. I just got nervous, and I sold half of my Ford. Yeah, because I was just listening to a lot of the government talk about the stimulus and how they're treating the airlines. And they're definitely, it looks like, going to take some warrants or some equity stake in them. And then I heard even if they take all this money, it's not nearly enough money if this thing goes even a little bit longer than we're thinking it's going to go. So if this kind of goes into summer and people don't like hesitantly travel, like they travel a little bit, but not really, like the airlines, guys, I mean, they could definitely go under. Now, I think JetBlue is the strongest balance sheet, them and Southwest and a couple others. Like Delta and American are bad. Like American's really bad. But the airlines, I think, could definitely go under for sure still. So I'm kind of, I don't know. I'm not in as heavy as I was before on JetBlue.
Yeah.
Just
same.
Did you sell a portion now, or are you still?
I sold half. So I have like 1,000 shares of JetBlue or 500 or something like that. But I might sell that too. I just have to see. I gotta spend more time thinking about it.
You're probably about even on it right now. So
yeah. Publicly traded, how about a 1212 boundless? Publicly traded psychedelic companies, MindMen and Champignon. Are those the mushroom companies? Like,
I don't know.
I think so. Oh, by the way, I had a meeting yesterday, a phone meeting, a Zoom meeting, with one of my venture capital colleagues out in the Bay Area, San Francisco, and he is invested in one of these cannabis software companies, one of the big ones, and told me that in the U.S., they have insight into the cannabis sales through the software company, that they saw record volumes, all-time record volumes of cannabis being pushed through all the cannabis players the last 7 to 14 days. So I was actually thinking about maybe throwing some money into just the cannabis ETF. There's that ETF out there. I forget what it's called. Just as like a short-term trade, right?
Yeah.
Just because, and that information, it isn't necessarily, it's already disseminated and people know. Everybody kind of has a hunch. All the cannabis players are doing well right this second with orders because that's what are people doing? They're at home smoking weed, right? Just be honest, a lot of people, not us, but there's a lot of people that are doing that. So it's the cannabis trade is kind of interesting here, and it's something that I'm going to look into more, especially based on that data I got yesterday. And they have great transparency. Like he told me that like they're seeing like a big part of the U.S. cannabis market through this software vendor, and it's up quite a bit, like all-time record up.
I'm just trying to find some cannabis ETFs to see what they're doing.
There's one big one. There's like it's 4 letters. Is
it Toke? Is it YOLO? Is it THCX? Is it POTX?
THC. I think it might be THCX. If you're gonna do it, you got to do it the big one.
That's down
right?
41% for the year. That's down 7% today. So these are all way down.
Yeah. Yeah.
But looking at total assets, Toke, Toke, is the biggest on this list. They only have $761,000 though. So these ETFs are
That's
small.
insane. No. There's one that's larger. There's definitely one that's larger, and that's the one I'm going to invest in if I do it. Because I don't want to pick one of these, because these cannabis companies all have really weird balance sheets. They're all kind of at risk, right? And so if you're going to do it, I think you got to do the sector and not pick one, because you could get into trouble. You always hear about these cannabis players blowing up. Let's see. Car insurance, we talked about that. Okay, who's Log? It said, what about Log, LOGM? No one's talking about them. Everyone's only talking about Zoom. Well, we talked about an alternative today, which was
Log Me In. If I were to guess, it's Log Me In.
I don't know them.
They're a big one.
Yeah, I mean, so if you think about it, that's how if you're a remote employee, which a lot of people are right now, that's how the IT team would be able to get onto your computer and fix things for you.
So wow, so
I don't know, I haven't looked at it, but
they came down 70% and then went right back up, and they're basically trading right at their all-time highs right now. So
is that one?
Yeah, I mean, look, I'm not. It's probably a good, solid company. I mean, I don't know how they do wrong, how they do bad in this environment, right? The problem is, guys. Yeah, I mean, it's probably good, but when this is all over, they probably also see a lift, right? So it's probably a net positive.
But Log Me In is the company that owns GoToMeeting.
Oh, do they? Okay.
Yeah.
Yeah. So like they're obvious beneficiary here, right? I think the thing about Zoom, why everyone's talking about Zoom, is that they have this viral aspect to the company that they've gone from basically a small number of clients to 200 million people this month on the platform. And they have all this brand awareness and momentum that they're kind of the hot new players. So like, who do you think when this is over, who do they talk about on like Wall Street bets every weekend Wall Street, like all on Reddit? It's going to be Zoom, right? And so to some extent, it's a momentum. It's a momentum player as well. But man, they got great branding out of this whole thing.
Yeah, they kind of turned into a Kleenex,
Yeah,
they did. I haven't even really heard of them before this whole thing.
You gotta respect
in the same way that WebEx kind of was the way we used to talk about it, and GoToMeeting is another one. Zoom is the new generation's way of having a teleconference.
Jared Spencer at 1226. Did we talk about Fleer already? We spent a lot of time talking about them, so you'll have to rewatch this episode when we put it on in about an hour. We're going to repost it. We have a lot, and we're going to be talking about them even more on Monday. How is flower going for Dumb Money? That was our cannabis trade. We talked about this on Dumb Money. We sold out of flower months ago. Did we end up making money or breaking even or losing a little? It was around break even.
I think each of us had a slightly different take on that, because we were selling it at different times. I ended up making a little bit of money, but not anywhere near what we were hoping to do with that.
I don't remember if I made money or broke even or lost a little, but it was right in that range. And the reason why we sold is because Flower tried to raise capital early last summer and was unable to raise capital. To me, that was a huge red flag, and it went from like $7 a share down to like $3 or something like that. And I immediately was like, if they can't raise capital, this is like a red flag for the whole industry. Nothing against Flower at all, but I just said I'm out of cannabis for right now, and it was probably a good timing move for us to get out of cannabis, because man, has that world gotten rocked since we got out of it. We might get back in at a certain point in time. Market's turn, guys. It's down, Dave, and now I'm feeling like I don't like that. I don't like that. I feel like I was all day. I took off most of my short this morning in the intention of putting it back on if the market started to trade down, and I have to be quick on this. Otherwise, I'm going to lose money every time I do this.
Yeah, the Dow's basically down to unchanged. It's still up 0.74%. The S&P up 1%. So we haven't completely turned, but we're
close.
Yeah.
Hold on, I'm putting my order in right now. I'm going to double my short position just up to 20,000 shares of SPY. I just doubled it, which is still, by the way, like it's still not even close to being hedged, fully hedged. That might be like a 40% hedge on my portfolio right now. But if this thing starts to go negative, the sentiment tide. Listen, we all thought this thing should be negative today. It's that oil news that's keeping it positive. Yeah. So if the oil news falls apart.
This is the Dow Jones 5-day. Let's zoom into just today so we can see that this is the beginning of the day. We were up, we were down, we're up. This is what we are experiencing in 2020. There's no stability.
So Dave, look, guys, before we get off today, there's one more thing I want to talk about. I actually, me and Lynn talked about this yesterday.
And by the way, we have a record number of viewers, I believe, for this channel, which is why we have a spammer who keeps showing up in our feed. Thank you for helping me moderate that. But 535 viewers, I think, is our peak simultaneous.
That's awesome. Thank you guys for watching. Please give us that liking this episode means so much for our YouTube algorithm. Please do it. But one more thing.
By the way, I shared this to my channel. So for all the Hey There, Dave here people out there, thank you for showing up. I also shared it to Dumb Money. We are only on Dumb Money Live now. So if you are new to this channel, maybe you watched us on the other channel. The other channel is all about startup investing. This is the channel where we talk about our stock market investing. And the only way to do that is to do it live. And we're doing it twice a week. We're doing it Mondays and Thursdays. So subscribe, turn on the bell. We're a new channel. We just have over 1,500 subscribers the last I checked.
Brand new channel. Only been around a couple weeks. Jordan, Dave, okay, for those of y'all that don't know, we live in Dallas, Texas. And the area of Dallas that we live in specifically, we're fortunate to live in a nice neighborhood. There's a lot of oil guys and a lot of commercial real estate guys. In fact, Dallas is kind of the epicenter of commercial real estate for the United States. I would say that probably a quarter of the dads that I hang out with are all commercial real estate reps, and I make fun of them all the time. Like, let me guess, commercial real estate rep. But we're talking about how the implications of this for a place like Texas. Okay, Texas has been the strongest economy for a very long time. Even when the rest of the country has kind of went into had some bumps and bruises, Texas has always kind of been better than the rest of the country. But we have low taxes here, but for both the energy industry to be crashing right now and the commercial real estate industry to be crashing at the same time, what are the implications for Texas? What are the implications for municipalities? Like, I was just thinking, house prices in our neighborhood have got to come way down. All these guys that are commercial real estate reps, tenant reps is what they're called, they're going to have a rough few months. Like, I really, really feel bad for them. They're going to have a rough few months. I'm worried about layoffs. I'm worried about loss of income. I'm worried about losing some of my very good friends from the neighborhood, quite honestly, because I love these guys and their kids are friends of my kids. But, there's going to be, I think, a lot of houses going for sale, potentially. That's going to bring down real estate values. And in Texas, we don't have a state income tax. So the only way that we generate income is from house taxes. And when you bring down the house values, that brings down the taxes that the cities and municipalities bring in, right? And we're operating now. Texas, just so you know, as a whole, it was expecting to generate $5.4 billion in oil taxes this year, right? And then we're going to put like 1.2 of that in our emergency reserves. Well, that's out the window. They might generate virtually zero. So that's $5 billion shortfall. I think we might be at risk of having municipalities and these municipal bonds that trade, right? There could be some, we don't trade bonds like a lot, but could there be some really interesting bond trades? We might need to research this.
Yeah, we should probably research that. There's also some, company news. Did you see that Marriott had a data breach? Normally, these kind of headlines would be all over, but right now, there's no room in the news cycle to cover things like this. Zantac has been completely recalled. Zoom, a company that we are hearing a lot about, the FBI is warning about security on Zoom, and companies like SpaceX and NASA are banning it. There's a phenomenon known as Zoom bombing, where you're having a nice, corporate meeting or classroom, and in pops a naked person screaming profanities. Zoom bombing is a thing, and that has actually hurt Zoom stock over the last
couple days.
Well,
Yeah.
couple of days. Exactly.
Zoom meeting and you don't put a password on it, you deserve to get bombed. Let's put it that way.
But they're also concerned about end-to-end encryption. So
Right.
Zoom claims that their streams are end-to-end encrypted. Apparently, NASA says this isn't encrypted enough for us, and that Zoom actually has the ability to listen in. So they're no longer using the platform as of right now. Amazon, did you see Amazon has, I mean, this has been going on for a couple of days now, but the workers are having these sick outs at Whole Foods, and about half of the workers at some of their warehouses are just refusing to show up. They're having they had that walkout in Staten Island.
So wait, they responded to that though, and now they're giving out masks to employees, right? And they're also doing temperature checks. So
well, and they're doing everything they possibly can, and managing this, the number of people they have working there, and they're hiring 100,000 people. They are giving paid sick leave to people who are sick or potentially sick. They've raised the wages for all of their delivery and fulfillment workers by $2 an hour, which is going to cost the company, but they're a big enough company I think they're going to survive and thrive after this. But did you see that Lyft is actually referring some of their drivers to jobs at Amazon? There's like a partnership there to help fill some of those vacancies with Lyft drivers.
They just filled 100,000. I heard they're full now, which is great.
But Lyft is also doing this thing where they are starting to deliver test kits and medical supplies and expanding their services to help the elderly and vulnerable populations, and 100,000 Lyft drivers have signed up to be a part of this program. So
I think they're only doing that in California so far. Is that correct, Dave?
That's what I saw, but I think they're trying to expand that to other locales as well. They did partner with, I believe, Medicare. They partnered with someone in California to jumpstart that. But there's just a lot going on.
Hey, Leon talks about 1234 thoughts on U.S. needing to nationalize more corporation services in this pandemic. I do want to touch on this because I actually tweeted one of my friends, Lee Drogan, founder of Estimize, tweeted something about the government just needs to handle the backstop here. Companies shouldn't be accountable for having to work their way through something like this. And I get that's where we are now, kind of, but I kind of disagree. I think long term, every company that is of a certain size or has existed for a certain long enough period of time that's a mature company, I think has the ability and should be mandated to pass a stress test, especially if they're taking out any debt. The same thing we do for banks, I think the government needs to mandate for any company that's taking out any level, any degree of debt. What that means is, I think, listen, my restaurant, we've done a good job. We have not made any distributions in the last 9 months, basically, except for a couple little exceptions. We have enough money to withstand, a few months of going with zero revenue. I think going forward, that we know this is a risk now, we should not have to rely on the government to backstop every company in America. If you take out debt, you should be required then to keep a certain reserve, right? No matter, especially if you're an airline or one of these companies like that are too big to fail. Like, they could have all have kept more on reserve rather than giving all these share buybacks and distributions. That is something that needs to happen. It needs to happen like when we come out of this. I know it won't happen because the government is weak and they're not going to push it. But if we did that, you know how much better prepared we would be for whatever the next pandemic. It doesn't even be, it could be war. It could be anything that happens in the next 30, 40 years, right? And it won't take our country down because we can all withstand 4 to 5 months of nothing because we prepared for it. And every company has a little mini war chest. You know what? Maybe we make a little less money because a little less dividends for a while, so the company can build those reserves up. But that's just, we're paying for it. If we don't pay for it that way, the government's paying for it, then we're all paying for it. And the government is inefficient at being a backstop. We've learned that now. They're inefficient, right? Like right now, they're giving $1,200 checks to everybody, even people that are fully employed, right? The government, it'd be more efficient if the companies were forced to do it on their own over time in a systematic way. So I just want to say that would be, if I were president, That will be my mandate, and that's how we fix this for the future. But it won't happen.
Is this you announcing your candidacy for 2024?
I told you I told Drew on our text string the other day. He's like, "You should run president." I'm like, no, I can't trade if I'm president. I can't not trade. Are you out of your mind? That just disqualifies me immediately.
You want to talk about Restoration Hardware? That's a company that has been beaten down, and that I actually I think I sold some puts or something on Restoration.
I bought it because I love it. I love the company. I have no idea if I bought it, if it's going to go down more or not. But it's just I feel like it's a company I want to have in my long-term, call it permanent portfolio. That I'm going to have this stock for years, not months. And so I figured I never owned it, and I bought it. What did we buy that, Jordan? Was it like
I bought it. You bought it before I did. I bought it around 90. I think you bought it in the 80s.
80s. Where's it at now? Did we lose money on that so far?
5-ish. They had, so it went up to 105, and then they had earnings, and the earnings were, less than impressive. Nothing terrible, but just they had a bad month and withdrew guidance. So it's just kind of chopping around now.
So does guidance even matter at this point? And should any company even have guidance?
Well, they're all pulling it, right?
Yeah,
I mean, that's probably the prudent thing to do.
You can't have guidance now, and truthfully, you're not trading on anyone's guidance anyway. Right now, you're trading on what you. This is when there's massive mispricing in the market because everything is up to us. Everything is up to the investor to figure it out on our own. Right? You can't trust anyone else.
What do we think about delivery companies? UPS, FedEx, Amazon.
I mean, I like delivery here, but they're already really high, right? Didn't they come all the way back up? So it's one of those trades where can we bring something different to the table that investors don't already know? Probably not.
My delivery play, my only delivery play is Amazon. They're delivering the world right now and using other carriers when they have to, but and their web services division is the main reason to be in them right now.
Yeah, I feel the same way, Dave. I get exposure to delivery through Amazon, and Amazon, everything they do is killing it, from AWS to grocery to just everything else, delivery. So that's my delivery play. More trust in Amazon than UPS long term or FedEx. All right, guys. By the way, guys, Sunoco. We just don't do energy. Energy is not our thing. Kind of like crypto. Anything about it. Financial, same thing. Capital One, not really our thing, guys. I think Wall Street does an okay job analyzing financials and energy companies. It's kind of what they're better at. They kind of stink at everything else. So we focus on things that Wall Street is not geared towards analyzing correctly, right? They're good at just a few things. We focus on retail sectors, we focus on e-commerce, we focus on things that Wall Street tends to be a little bit behind and slow to see trends unfold. All right, guys, are we done? What are you doing for the weekend? Are you guys going to be kind of a count neutral to long?
I am 100% neutral going into the weekend. I've been neutral for 2 days now, and that's where I'm going to stay. What about you?
So by saying that, it means that you're willing to miss out if there's a huge move up in the market, but you're not going to get hurt if there's a huge move down in the market.
Yes, and my overall sentiment is the market will go down before it goes up, and I'm just not wanting to sell my long positions because these are long-term holdings for me that I plan to keep for forever. I've temporarily put the brakes on with a short that isn't really 100% covering my portfolio, but it's about where I want to be.
I'm 30 to 50% short hedge right now, so I'm long, right? I'm just not as long as I could be, and I think I'll probably stay around that level going into the weekend, somewhere between 25 and 50% hedged on my account going into the weekend. I bet is where I'll be. And that will change based on the three drivers that we talked about if anything changes between now and end of day tomorrow. Jordan?
I'm the part of my portfolio that's actually in the market is long, and then I've got my shopping list and wallet full of money to go buy stuff. Basically,
you could be 30% more long by the time this is over, is what you're saying.
Oh yeah. Oh,
So are you 20% cash, 50% cash, 5% cash? What is your how much in the market are you right now?
35 to 40% cash.
So conservative.
That is so
guy.
conservative.
It's so conservative. I love it. I love it. It's just, it's Jordan, man.
I could end up dropping a good amount of money on stocks.
Yeah. I bet he'll come out of this less than 50% cash, which would make sense. Because remember, cash is going to stink after this is over with, right? It's going to stink.
I want to get down to like 10% cash.
Yeah. With $6 trillion coming into the market, you don't want to be in cash.
When Jordan is 10% cash, Chris will probably be 200% margin. That's kind of our. I'll be 100% and Jordan will be 10% cash and Chris will be 200% margin.
Just one quick story before we end. I don't know if you remember this. My days when I was living in LA, working at a car dealership, selling cars. Me and Lynn were at the Santa Monica BMW in LA. And I'll never forget. I had all of my accounts fully margined, okay? And then I was using the margin. No. I had all of my credit cards maxed out, using the credit cards in my stock,
into
the
a
cash
account.
Cash advance on my credit card in my brokerage account, margined out and full out levered with options, and lost it all. God, I mean, that was way back in the day. We're talking 28 years ago, 5 years ago. I don't know. It was a long time ago, right?
And it took you how many years or decades to recover from that? It was like a long time.
No, the best thing about that was it wasn't that much money in the grand picture of things today. But at the time, it was all the money in the world.
To you,
times
it was
4, right? So it took me a few years to get back, but whatever.
That's a great story. Before we go, also, please do remember to smash the like button. It really helps us out with the YouTube algorithm. If you're not already subscribed, subscribe to both channels. We are, I guess...
We had a new episode on Dumb Money. Didn't we have you finally finished editing
last week? We did post that new episode, and it has an update on our what we're doing with our startup companies, so that's awesome. Be sure you check that out. And we're planning another episode for the original Dumb Money channel. We're going to be checking in on some of our investments. We're going to do a Zoom meeting with a bunch of company founders to see how our investments are holding up in this crisis.
And that's good for traders too. Like if you're on this channel because you trade stocks, you should definitely subscribe to our normal Dumb Money, because that episode alone, as a trader, to see firsthand what these small business owners, what they're actually doing, how their cash is looking, what their confidence level is, I think will be beneficial for trading as well.
Absolutely. And you should also check out my other channel, Hey There, Dave here, because I have a new video coming out as soon as I finish editing it. I shot it yesterday and I had 98 questions come in when I posted a little Ask Me Anything. So I'll be answering as many of those as possible. If you listen to podcasts, you can catch up on all of our live episodes on Apple Podcasts, Spotify, Google, anything else. Thank you guys so much for watching. Please stay home, stay healthy, stay safe. I'm Dave Hansen for Chris and Jordan. We are Dumb Money. We'll see you next time.